Change of character versus break of structure. All right. I'm glad you back. Glad to have you back. What's up? How you doing? So yeah, the two things called break of structure and change of character. I know those sound like, some of y'all ain't never heard those two terms before. Put a W in the chat if you heard of that before. If you never heard of it, say teach. Say teach if you've never heard of the terms break of structure and change of character. But if you have heard of them before, put a W in the chat. Y'all let me know. I'm just trying to see who all we got in the class tonight so far. But I'm gonna break them down to you like you never heard the word trend before. I'm gonna assume none of y'all know what it is, and that's how I'm gonna teach. I know most of y'all already know the vocabulary, but I feel like some of y'all still don't know what it actually is telling you. Knowing the words is not the same as knowing the language. I'm pretty sure y'all know that, so that's why we're going to go over that tonight. Anybody can memorize that a red candle mean that the price went down. That's not trading. You just watching colors, right? So real trading is reading what the market is telling you about who is winning the fight right now, the buyers or the sellers. And then you could decide whether you betting on that fight continuing to happen or you betting on it flipping. That's what it is. So that's the whole game tonight, y'all. 2 ideas. Netflix taking off, says Mizelle. We knew that was going to happen, right? But anyways, that's the whole game, y'all. That's what we're going to talk about tonight. I want y'all to, by the end of this live stream, you're going to stop getting faked out by moves that look scary, but they not really scary. And you can stop staying in trades that look like everything cool, but the shit then already broke. All right? Y'all let me know what's happening. How y'all doing? What's up, champ? Hope all is well. Yes, all is well, cool nerd. What's up? How you doing? Thank you for asking. Before I go any further, I want y'all to think of a time in your life. I don't care if it was sports. I don't care if it was an argument. Anything competitive. Think about a time in your life where you could feel the momentum shift before the scoreboard changed. Hold that feeling, because tonight that feeling is going to get a name added to it, and I'm going to give you a rule book for it. Cool Nerd says, I am destroying Microsoft. That's what I like to hear, Cool Nerd. Y'all, obviously, y'all eating off Microsoft and Netflix. Y'all want me to go look at Netflix. Y'all want me to go look at Microsoft. I will in a second. All right, give me a second. Right now, y'all, they got to get this work. Tori, what's wrong? What that face mean, Tori? Talk to me. What's the problem? I don't like that face, Tori. That face look worried. What's wrong? I have no clue why that just sent. Okay. Your phone know what's about to happen. Yeah, your phone tweaking. Anyways, right? So look, break of structure. We're going to start with BOS. I think that's a good place to start. We're going to start with BOS. Break of structure, right? Are y'all familiar with the break of structure? The signal that the trend continues. Y'all familiar with that? BOS stands for break of structure. It means that the trend is still doing exactly what it's been doing, and the market just proved it again. All right, so look, the price never moves in a straight line, y'all. It's never going to go straight up. It's never going to go straight down. It's going to look like a staircase. All right? It's going to look like a staircase. It's going to go up a little bit. It's going to go back down a little bit. It's going to go up some more. It's going to go back down less. It's going to go up again. Every up a little bit leaves behind a high. The top step. Every time it come back down, it leaves behind a low. The bottom step. Are y'all on the same page with me? Y'all picking up what I'm putting down, or do I need to re-explain it? Let me know. Say we got it. Say I got it. Right? Let me know if y'all got it. If you need me to re-explain it, let me know and I will. We're going to take it real slow. I'm not going to rush through this. I want to make sure y'all really understand, overstand, and understand the concept that I'm teaching tonight. If y'all new here, hit the follow button so you don't miss another live stream. Share the live out. Everybody tapping is clapping. I appreciate it so much. It pushes me out to the For You page. So do that for me. Share the live. Hit the follow button. Maybe tap on the link in the bio for sure so that you can join the community. All right. But Since nobody got no questions, I'll continue. In an uptrend, whenever the price is in an uptrend, that means the price is going up. When it's in an uptrend, the price goes above the last high on a staircase. That is a bullish breakup structure. Okay, let's look at a bullish breakup structure right here on the chart. You see how the price was going up in this uptrend? And then the price came back down, but then when it went up again, it went above the last high. That is the staircase. That is the bullish breakup structure. That is the market saying, I told you I was going up, and I just proved it again. In a downtrend, it is the mirror. The price breaks below the last low. Okay? You can't see one right here. I got to go to a downtrend moment. 1 second. Here we go. This is cool. So this is a downtrend. This is what a downtrend look like. See how the price going in a downward motion? All right. In the downtrend, the price breaks below the last low. It went down, it came up, and then it went down lower than it did before. Basically, that's a bearish breakup structure. The sellers are proving that they are still in charge. Any questions before I continue? Noted. Okay. All right. So look. No questions? Nobody got no questions? I'm waiting. All right. Cool. I want y'all to think about, y'all remember when we was kids and we was on the monkey bars? So every time we reached a new bar further than the last one, right? We proven that we still got the grip to keep going. Nobody worried about falling and shit. You just did one rep after the other one. That's breakup structure. Okay? That's not exciting news. I know it's confirmation news. It's just basically showing that the trend is still there. That it existed. Breakup structure just re-signs the deal saying, hey, this shit is going to keep going. So listen, this is what it don't mean. A breakup structure is not your permission to jump in and chase a candle. I'm not telling y'all to do that, especially not chasing a candle that just broke the level. I'm not telling you to just, get in because it broke the level. No, a breakup structure is your permission to start watching for the market to breathe, to pull back a little bit. Before you enter with the trend, you want that pullback into an area that we're going to cover separately. But for tonight, I just want y'all to know it is called a fair value gap, or it's called an order block. That pullback is going to be your entry. The breakout candle is not your entry. All right. The breakout candle is not your entry. How many of y'all entering every time y'all see the price break? That ain't the name of the game. Okay. If the price just broke above the last swing high like we did just now on SPY in an uptrend, are you looking for longs or are you looking for shorts on the pullback? I want y'all to let me know. Are you buying calls or are you waiting for are you buying puts? What y'all gonna do? Let me know before I go to the next part. Good evening, Lisa. How you doing? So y'all ain't gonna answer my question. I'm gonna ask y'all again. If the price breaks above the last swing high like it did here on SPY, are y'all looking to go long or are you looking to short on the pullback? Are you buying calls or are you buying puts on the pullback? Let me know. Don't be scared. Bree said I'm going long. Okay. If you saying long like Bree, you tracking. If you hesitated, that hesitation is telling you something. That's exactly why we here tonight. Okay. That is why we here tonight. Now I'm gonna go to change your structure. Oh, my bad. Change your character. Change of character, right? So y'all know what breakup structure is. Now we're going to talk about change of character. This is the first sign that the trend you've been trusting might be about to turn on you, okay? In an uptrend, the market isn't just making higher highs. It is also making higher lows. It's not just making higher highs. It's making higher lows. meaning even the pullback stopped going down before they reached the last low. A change of character happens the first time the price breaks below one of those higher lows. Okay? Y'all keeping up? Let me know if I need to go back. I think I want to find it on the chart. Yeah, here we go. This is a good example. So the price was making an uptrend right here. Price was making an uptrend right here. I'll put a horizontal line. Hold on. Sorry about that, y'all. Let's do a trend line. Cool. So from here to here, we got an uptrend. It's making higher highs and it was making higher lows. Okay. From here to here, we're making higher highs and higher lows. Then all of a sudden, the price is literally, okay, if you pay attention, it's the first sign that the trend is about to turn around. Okay. Now, the first time that the price breaks below one of the higher lows, we got these higher lows right here. And now the price finally broke below the higher lows. And look what happened after that first time the price broke below the higher lows. If I'm gonna circle it, I feel like some of y'all still don't know what the fuck I'm talking about. Right, so look. The price came up, came down to create this low. Came back up to create a high, a higher high. Right here. Because it's higher than it was here. All right, and then it came back down to create a higher low, coming back up to create a higher high. We got a higher low, we got a higher high again, and a higher low again, and a higher high again. And then finally, this is the first candle. I'm gonna make it red. I'm gonna make that, oh goodness gracious. Jeez Louise. It's not at all what I was trying to do. Okay, we're gonna make this circle red, because this is the first candle that I'm telling y'all to pay attention to, so you can see this in real time. So this red candle, okay, this needs to be a different color too. All right, because right now I'm only talking about the blue lines. Now the red circle is showing you that change of character happens right there. The price breaks below one of those higher lows. The one broken low is the crack. It does not mean the building collapsed just yet. It just means somebody found out that the foundation ain't as solid as everybody think it is. Bree says, so if the price breaks a swing high to the upside, it's not a buy. I didn't say it's not a buy. I said that you was basically tracking. You was on point for paying attention. Yeah, it was time to go long. Yes. But not on the candle that breaks. Not on the candle that breaks on it. Okay? This is a change of character is not proof that the trend is over. It's just proof that you can no longer, you don't just get to assume that it's not. But this is where I want you to lock in, right? This is where beginners lose a lot of money. Not from bad information. They ego get involved. They fall in love with the trend, okay, that they already caught. And when the first change of character shows up, they explain it away. They brain try to go to making excuses and lying to them, saying that's just a pullback. No, Ninja, that is not a normal pullback. A normal pullback does not break the structure. A change of character does, by definition. If it broke the higher low, it stopped being a normal pullback in the moment that it broke. All right, so that's the market telling you. That's the data telling you the balance of the power has shifted. Thank you for the gift. I appreciate that, Bree. Yeah, if y'all new here, hit the follow button. So facts don't care how attached you are to your open position, y'all. Facts is going to be facts. You understand? So can anybody now tell me what's the difference between a normal pullback and a change of character? What's the difference between a normal pullback and a change of character? Congratulations to OEF. I ain't mean to laugh. I meant to press the this button. But congratulations. Y'all don't know the difference? After everything I just said, y'all still don't know the difference? I know some of y'all do. The difference between a normal pullback and a change of character, if your answer doesn't include breaks the previous low, like E-money trades, or breaks the previous high, then you don't understand it yet, y'all. Okay? You might need a 1v1 with me. That's fine. Inbox me. Matter of fact, say 1v1 right now in the chat, and I'm going to reach out to you. All you got to do is say 1v1 in the chat, and I'm going to reach out to you. So now I want y'all to get the difference between break of structure and change of character. They can almost look identical at first glance, right? At first sight, it's going to look like they the same thing. A break of level, a little momentum, right? But they are giving you opposite instructions. A break of structure is telling you stay in the trade. The story is going to continue. Get ready to enter or get ready to add with the trend. You might be able to add more. The change of character is telling you be careful or get the fuck out the trade, okay? The story is flipping on you. It's changing. You confuse the two. You're going to do this. It's going to hurt you. It's going to be the single most expensive thing that you can do. This is the most expensive thing that a trader could do. Buy a top or short a bottom. And you full of confidence doing it too. Because you was convinced that this shit was going to keep going. Okay? But really the reversal was happening and you didn't pay attention in the change of character or the break of structure class that was free on TikTok. You weren't paying. You thought, I don't know what you was here for, right? But we here to learn. So I have a test for y'all real quick. Anytime that you are not sure which one you looking at, I want y'all to ask yourself one thing, right? I want you to say, did this break happen with the direction of the trend that the trend was already going in, or did this break happen against the trend? Okay, so now let's fast forward to where we at in SPY right now. Did this break happen with the trend or against the trend? Can anybody tell me, did this break happen with the trend or against the trend? Looking at this chart, this 4-hour chart of SPY, did the break happen with the direction the trend was already going or against it? I need to see some answers in the chat. Did y'all hear me? Did y'all want me to ask the question again? This is a 1-question test. Anytime you are not sure which one you looking at, ask yourself exactly one question, y'all. Did the break happen with the direction the trend was already going or against it? Chester, McKenzie, yes, you got it right. Going. Okay? And if it's going with the trend, it's going with the trend, Diamond. Look, the price broke. It was already in an uptrend. The price broke above the previous high. Right there, that level. The price broke above the previous high. You see? So it went up. It continued the trend. When it continues the trend, which one is it, y'all? Is it a break of structure or is it a change of character? Let's see if y'all been paying attention. Is it a break of structure if it's with the trend, or is it a change of character? It's you. It's you too. I don't know your name. It's you. You need to hit the follow button if you want me to check. Yes, it is a break of structure. If it breaks the level with the trend, that's a break of structure. If it goes against the trend, like the one I showed y'all over here in the past, okay, it was in an uptrend, and then that first red circle is where the price decided to break to the downside against the trend. The trend was going up and it broke against it, and look what happened after it broke. Y'all gonna know what's going on in the future. You will not stay in a losing trade, or you will be able to get in with a better entry from now on. Now that y'all understand, and and comprehend what break of structure is and change of character. I'm telling you. That's the entire test. It's not about how big the candle is. It's not how it feels. Okay? It's about the direction relative to what was already happening. That's it, y'all. That's it. So think about an uptrend. The price just broke below the last higher low with the trend or against it. It went against it. Cool. Change of character. It's not complicated. All right. A trend does not die on one candle, y'all. A trend does not die on one candle. This should be in an uptrend. It ain't going to just stop being in an uptrend in one candle. Know that. No matter how it looks on a 5-minute chart, when you anxious about a position, it dies in a sequence. And if you know the sequence, you stop getting faked out. So we're going to go over the sequence in a second. Give me a second. Let me change the picture. All right, here we go. I'm finna teach y'all the sequence. Y'all ready? Everybody hit the follow button. I want to make sure everybody that hasn't hit the follow button yet, hit the follow button. Share the live. Share the live out, y'all. Help me get up to 10,000 likes. You know, share the live out for me. I need to get more people, get this information out to more people. I got limited spots for the 1v1 so far. Chester, I got you on my list. Chester McKenzie, I got you on my list. Queen says, thank you for going over this. Thank you for being such a lovely audience. No problem, Queen. You're welcome. It's my pleasure. All right. I just need y'all to hit the follow button if you haven't already. I'm new but ready to learn. And if you are ready to learn, Mackenzie, you ready to earn. If you could learn, you could earn. That's right. If you could learn, you could earn. So listen, y'all. Step 1. Okay. The trend is running. Y'all know what a trend is. That's when the price is making higher highs. It's going up, then it come down, but it go up higher than it did before. That's a higher high. It come down and it go higher than it did before when it dropped down. That's a higher low. That lets you know the price is in an uptrend. Okay. So if it's doing the opposite, making lower highs and lower lows, that's a downtrend. Either way it go, the trend is running, right? So let's say uptrend, break of structure after break of structure, higher highs and higher lows stacking up like somebody on a winning streak. Step 2, the first change of character shows up. I'm gonna go back to the same example we did before because it's gonna look the same. Statistically, historically speaking, it's gonna look the same every time. Higher highs, higher lows, break of structure, change of character. Lower highs, lower lows. That's how you can tell the trend. So anyways, step 1, the trend is running. Now step 2, the first change of character shows up. This is just a warning. This is not the confirmation. You don't get in just because of this red circle. That's not the best place to get in. Remember I told you it doesn't happen in one candlestick. Okay? Step 2, change of character shows up. Don't do nothing yet. It's just confirming that the old trend is taking a hit. It might not continue. Nothing more yet should happen. All right. Step 3. The price usually pulls back into an area of unfinished business on the chart, entering a fair value gap or order block, basically a spot where the market moves so fast it left footprints and it still got to come back to that area and clean up. Or the fair value gap will act like a magnet. I will teach another class on fair value gaps tomorrow. If you don't want to miss that, hit the follow button. All right, so look, step 4, a new break of structure happens, but now in the opposite direction of the original trend. This is your confirmation. Not the change of character, the break of structure that comes after the change of character. Step 5, you now have a new trend and the whole cycle starts over from step 1. Now, the number one mistake that I see people trading the change of character like it's already a confirmed new trend. That's not what you're supposed to do. You cannot trade that change of character like it is written in stone. This is a bell. Change of character is a pay attention bell. You should be paying attention. Okay? Wow. You should be paying attention when you change the character. The new break of structure is the act now bell. The new break of structure is the pull the trigger. You're going to wait for the confirmation before you commit any real money or any real risk to a new direction. Are y'all understanding what I'm saying? Is you going to quit a stable job over a rumor that you got money coming to you? Or is you going to make sure that this shit is set in stone before you do some stupid shit like that, right? No, you're going to make sure. Same thing with trading. So what actually confirms a new trend has started? The change of character or the break of structure that comes after it? Y'all let me know. What actually confirms a new trend has started? Tell me. That's what I like to see. Anybody else? What confirms a new trend has started? Is it the change of character or is it the break of structure? Yes, Queen. Yes, Remarkable King Glass. Break of structure is... Say it with me, y'all. Break of structure. The BOS after the COCH. The break of structure after the change of character, not the change of character itself. All right? We can wrap it up now. Y'all know. Y'all get it. Y'all get it. Y'all get it. We can wrap it up. We can go on to the next topic now. This is my favorite topic. This is my favorite topic right here, y'all. Because if you understand, overstand, and understand risk to reward ratio, you can literally lose more trades than you win and still make more money than you lost. Sounds impossible, don't it? It's not. It's math. Simple math. Okay? It's going to require you to follow rules for sure. All right, you got to be able to follow rules. If you can't follow your own rules, you might as well forget about risk to reward ratio. And what helps you with following your own rules or having some type of discipline is knowing how to use them order types. That's right, knowing how to use the stop loss. Letting the stop loss do all the thinking for you because you did your work by saying, hey, this is where I want to get out the trade if I'm wrong. This is where I want to get out the trade if it go the right way. Having a plan before you get in the trade is going to help you. So I told somebody earlier, you do not put on the seatbelt in the middle of the crash. You put that shit on before you get in the trade, before you get on the highway. Now, we're going to talk about risk to reward ratios because this compares two distances on your chart. Not going to hold you. What you talking about, Willis? Why you say that, Mackenzie? Risk to reward compares how far your stop loss is away from your entry, right? That's how much you risking. How far your stop loss is away from where you got in the trade. And how far your take profit is from your entry. That is what you are aiming to gain, your take profit. You risk $1 to make $1, that is a 1-to-1 ratio. If you risk $1 to make $2, that is a 1-to-2 ratio. If you risk $1 to make $3, that is a 1-to-3 risk to reward ratio. So far, are y'all with me? Drop an M in the chat for how much money you finna make. Millions. Drop an M in the chat if you really understand what I'm saying. If you grasp what I just said, let me know. Cool. We got millionaires, billionaires, trillionaires in the chat. That's what I like to see. Money magnets in the chat. Cool. So, the math that I want to give to y'all that's going to change how y'all think about winning and losing. Joe says, setting a stop loss is our protection from our gambling self. That's right, Joe. Joe got it figured out. A lot of people are gambling, and it will protect you from that because you can't help it. You think that you just want a win. You want to win no matter what. I get it. But hear me out. This math is going to change how you think about winning and losing at a 1-to-1 ratio. Okay, that's that risk $1 to make $1. You need to win 51 trades out of 100 trades just for you to come out ahead once the losses are accounted for. That means you need to be right more than half the time, which is hard to sustain. Anybody that trade know it's hard to be right 50% of the time, let alone 51% of the time. You just right. That's not realistic. Okay, that's not realistic. Not saying it's impossible. Some 60-some% win rate. It is not impossible. It's not impossible. People have done it before. But let's be realistic. At a 1-to-2 ratio, you only need to win 34 trades out of 100 trades to be profitable. Can you imagine? All right. You can literally only win 34 out of 100 trades and you still making money. At 1-to-3, you only need 26 trades out of 100 trades. You can be flat out fucking wrong nearly 3 out of every 4 trades and still make money as long as you actually let the winners run to the full target and actually cut the losers at the stop loss. As long as you got some type of discipline. That's the catch right there. What's the catch? The catch is you got to have some type of fucking discipline, okay? That's the catch. That's the hard part. Excuse my French. I'm just telling it like this. We ain't even got to use a gambler as an example, Joe. Let's think about a farmer, okay? A farmer does not expect every seed in the ground to sprout. Some gonna get eaten by birds and shit. Some of them not gonna get enough sun. Some of them just not gonna take. A good farmer is gonna plant knowing maybe 1 in 4 seeds is gonna become something. But the ones that grow feed way more than what the failed seeds cost. The farmer is not failing 75% of the time. You see what I'm saying? The farmer is running a business. That's if they running it correctly. The harvest was designed from the start to outweigh the losses. That's what I want y'all to understand, that you need to get this shit in your mind from the get-go. You gonna have some losses. The wins need to outweigh the losses. Trading at a 1-to-3 risk to reward ratio is the same mindset that I'm talking about. You are not supposed to bet at 1,000. Everybody that ever played baseball know what I'm talking about. You are not supposed to bet at 1,000. You are supposed to make sure that your wins are way more than 3 times your losses on an average. Okay? How do you do that? By keeping a small loss. By making sure you're taking small losses. How can you fucking do that if you're taking big losses? First of all, some of y'all only got $200 in the account. Some of y'all only got $2,000. Some of y'all got $200,000. But even the ones that got $200,000 in the account shouldn't be fucking losing $80,000 from January to July. I mean, that's crazy. That's crazy. How much money you got? This is going to let you know you need to keep your losses small. A trade should only go in 1 or 4 ways. A good trade should go in 1 or 4 ways. Everybody already know what I'm about to say if y'all been here before. It should either be a big win, a small win, a break even, or a small loss. A big loss is not an option because you have power over how much you lose. Joe says, right, we let one loss make us believe we're a failure in trading overall. Joe, I don't speak French. I'm just playing, Joe, but I know that feels shit. But yes, Joe, right. A lot of people let one loss make them believe that they are a failure overall in trading. And listen, yo, you are not defined by your losing trades. Yeah, you're welcome, Joe. We got 2 Joes in the chat, y'all. What's happening? But do y'all get what I'm saying, y'all? Put an M in the chat if y'all picking up what I'm putting down so far. I need to make sure y'all we on the same page. Because I'm about to tell y'all the part that's actually going to determine whether you make money with this math. And it's not the math. Got you. Okay, cool. If y'all set a real stop loss and a real target, and then halfway through the trade, you panicking and shit, and you pull out early because it's not moving fast enough, you never gave the ratio a chance to work. Don't message me and try to tell me what I taught you was bullshit, because that's not the case. I'm gonna treat you. I'm gonna cuss you out like my mom and my auntie and my cousin them from Aberdeen, Mississippi. You gonna get a mouth. You gonna get an earful. I'm not your average. I'm gonna tell you it's your fault. I'm gonna explain it to you. I'm not gonna kiss your ass though. I'm gonna let you know this is your fault. You the one getting panicky and shit for no reason. You never gave it a chance to work. Most people don't lose money because they risk to reward math was bad. They lose money because they know the math. Okay? They'll say shit like the math don't matter to me, coach. They'll say the math right back to me right now if I ask them. They'll explain it to me in a heartbeat. And then they're going to override the math with emotions in real time. I seen it happen. When the trade go red, they stomach end up in their throat, they heart fall in their stomach, they heart go to beating, and heart they hold their breath and shit. Remarkable King Glass says, only reason you gonna panic is because you are over leveraged. Remarkable King Glass just beat me to the case. Literally, I tell people that all the time. If you getting mad over how much, anybody that get upset, they like, coach, I heard what you said about the risk to reward ratio shit, but I keep getting stopped out. My stop loss keep getting hit. Remarkable King Glass, what you got to say about a stop loss getting hit? How do you feel about your stop loss getting hit too many times? A lot of people don't know math either. That's also one of the problems. Remarkable King Glass said that's the cost of doing business. The cost of doing business. And if it was $8, Remarkable King Glass don't give a fuck because the stop loss was set to where he only lost a little bit. Rocket Dodger letting you know you could have lost more. See, these are professionals. I know professional traders see them. I know professional traders when I see them. Again, it ain't about the math. A lot of them know the math. They'll end up telling it to me. So it ain't about the chart. The chart didn't beat them. The math didn't beat them. Their own nervous system beat them. No, it's also because we fear, you use the word fear, that's emotions. We fear losing the little we have, so we panic out of fear of missing out. It's fear still. Nervous system. Stop loss saves you from big L's, says the mobile trader. Joe says, I just started. What's your thoughts on buying short entries instead of long? Joe, there's a time and a place for everything. I think when it's time to short the market, it's time to short the market. What do you mean? What's my thoughts on buying short entries instead of long? Sometimes it's time to short the market. Hey, Remarkable King Glass says, you still over leveraged, Joe. Not the other Joe, the other Joe. I don't know which one. I hope y'all know which one I'm talking about. No, I do it even when I'm investing 50. Get rid of that shit, Joe. Stop acting like that, bro. You know better than that. You know better than that. Remarkable King Glass says, Joe shouldn't be trading with your last. If you don't have it to lose, then you shouldn't be trading. And he ain't just talking to you, Joe. That go for everybody. Remarkable King Glass said it right. If it's your last, it's going to fuck up how you feel when you trading. So if it was money that you could afford to lose, you wouldn't feel that way. It'll take away a lot of the anxiety, a lot of the blood pressure if you wasn't trading rent money, mortgage money, car note money, laundry money, phone bill money, lunch money. I don't give a fuck. It don't matter. It should be money that you are comfortable with trading. I gotta mute some people. I'm new in the trading view. Want to learn how to set up my first chart. Bambi Baby, inbox me right now. If you serious and not curious, I got you. Remarkable King Glass, bro, if you started trading out of fear, you're going to fear even with play money. Stop doing it then. That ain't true. That ain't true, Joe. If you started trading out of fear and you change the way you think, because you got to do shit different to get different results. You can't do the same thing and expect different results. You know that, how is that working for you? How is trading with fear working for you? That's right, Jacob. Expendable cash. How about disposable cash? How about disposable cash? But back on the topic though, I got off topic a little bit reading the comment section. Y'all know how we do. I get a little carried away. If your win rate is 30% only, if your win rate is only 30%, does that make you a bad trader? Yes or no? I want y'all to think before you answer. If you have a 30% win rate, does that make you a bad trader? No, no, no. Okay, that's right. At a 1 to 3 risk to reward ratio, a 30% win rate is profitable. That means they're making more money than they're losing, and they're only winning 30% of their trades. So the real question was never, am I winning enough trades? It's, am I actually respecting my stop loss and my target once I am in the trade? Say it back to me, y'all. Let me know. Win rate by itself tells you almost nothing without knowing the ratio attached to it. You understand what I'm saying? So start taking small losses. Keep your losses small and let the winners run. And I know a lot of y'all like, man, I only got one contract. Well, come on now. You only buying one contract, so you got to take profit immediately or you get stopped out, right? But you can only sell that one contract one time. There is no leave a runner if you only buying one contract. You feel me? Anybody still confused on the risk to reward ratio? Anybody still confused on risk to reward ratio? Let me know. Any questions? And if y'all new here, hit the follow button. If you have one, you have to trail with your stop loss. The mobile trader says if you only have one contract, then it would be smart for you to trail with your stop loss. A trailing stop is basically, instead of you having a level that the price will come down to and kick you out, you're saying, hey, I want my stop loss to follow the candlestick that's going up. So if it do come back down, I get to get out with all of that profit that it made instead of me waiting for it to come all the way back down to zero. Chester says, when's your next class, coach? Every night from 11 to about 3 p.m. I said 3 p.m. From 11 p.m. at night to 3 a.m. Anytime. It might not be the whole full 4 hours, but anywhere between 11 p.m. at night to 3 a.m. in the morning, Eastern Standard Time, you can catch me on TikTok Live doing a free webinar. Remarkable King Glass said, social media got the trading game completely fucked up, having people thinking they gonna turn $100 into $100,000. It's bad, Remarkable King Glass. It is bad. It's horrible. And when I tell somebody this, they tell me I'm fucking wrong. And that this is possible because they seen somebody on TikTok do it, or they seen somebody on Threads do it, and I'm like, okay, go do it then, Missy. Go do it then, sir. What's stopping you? Because last time I checked, Warren Buffett ain't even fucking with stock options. You know why? Because stock options are dangerous. Dangerous, I tell you. Yes, you can grow an account. Yes, you can grow your account fast, but you can also lose your money as well. You can lose a lot of money real fast, just like you can make a lot of money trading futures or stock options. But if you listen to the professionals, like the real professionals, go speak to any market maker, they'll tell you 90% of the stock options, 90% of those calls and puts expire worthless. 90% of them expire worthless. Bambi says, thank you for being 100. No doubt, Bambi, I'm not here to sell you a course. I don't care if y'all buy the course or not. I don't care if y'all hire me to teach you anything or to be your mentor or not. I have enough people in abundance already that come to me for help. So I'm not here to lie or steal or take from anybody. I've actually given more than I've gotten in return from anybody or anyone on TikTok. All right, my time is valuable. I do not sell my time. My time is not for sale. My services are. Chester says, it's growth stocks better. Being a long-term investor is always better. Never ignore or neglect your future self for this short-term instant gratification. Learn the value of delayed gratification. Okay? But I'm pretty sure y'all understand that these are not two separate skills that I just taught y'all, right? They are two different jobs inside the same decision. Reading the break of structure that I taught y'all and the change of character answers when to be in a trade and which direction, right? Is the trend continuing or is it reversing? Should I be a buyer or should I be a seller right now? The risk to reward, right? This answers how much to risk once that direction question is already answered. The structure gets you pointed the right direction, right? The structure is going to get you pointed in the right way. The risk to reward protects you once your read on that direction is completely wrong. Because guess what, y'all? You're going to be wrong sometimes. Now, put together, you watch the trend build the break of structure. After break of structure, you catch the first change of character. You go on alert. Right? Instead of being in denial, you go on alert. You wait for the new breaker structure to confirm the new direction. Only then do you enter. And when you enter, you already know what your stop loss is. You already know what your target is before you click anything. And if you structure it at a 1-to-2 ratio, you usually want to do it a 1-to-3 risk to reward ratio. This is not luck. This is a system. Bambi says, how do you create a list of valuable contracts? Using a screener, Bambi, there's something called a stock screener, but there's also an option screener. I want you to do your homework on what an options screener is, Bambi. And Bambi Baby 61, if you are not using AI, I highly recommend you use AI to help you. Okay? Say, I don't know how to use a option screener. Can you teach me how to use an option screener like I'm a kid because I don't understand it? This is the software that I'm using. Can you teach me how to do it on this software? You will be amazed at the results that you get, Bambi, but you ain't got to sit around and wait on nobody to help you do nothing. You are empowered. You got the power. You can do it. You can do it. But yeah, y'all, that's the system. Systems are what separate people who trade for 20 years from people who blow up an account in 20 days. All right, y'all drop an M in the chat if y'all learned a lot. If you learned anything, even just a little bit, do me a solid and put an M in the chat. Hit the follow button if you haven't hit the follow button first. All right, because I got a job for y'all, right? Before y'all touch any chart, pull up 10 past setups. I don't care what it was. Could be SPY, it could be whatever you've been watching or trading. But for each one, I want y'all to, on the chart, identify whether the last structural break was a break of structure or a change of character, and say why. Use the actual definition. Don't say how you feel. What's up, Monique? And second, if y'all have taken that trade, calculate what your risk to reward would have been based on a realistic stop and a realistic target, not the perfect exit that you'd only see looking backward, right? Because you can look backward at all the trades you already took and say some shit. It's easy to do that. I'm talking about going forward. If you can't do this cleanly, you don't understand what I'm saying yet. Some of y'all need to be taking bro mentorship. If not his, somebody's. That's right, Remarkable King Glass. If not mine, somebody's, but please be careful who it is. Some people, Remarkable King Glass, have to learn the hard way, unfortunately. And that's okay. All right, I had a knucklehead. I had a hard head. I had to learn the hard way. I learned from taking losses. Okay? But my biggest mentor was YouTube University. But it's going to take you 3 years. Do you got 3 years? Do you have 3 years of time, dedication, hard work, and money to learn from losses, to pay the market tuition? Because that's what you're going to end up doing. Like Remarkable King Glass just said, you either going to pay for mentorship or you're going to pay tuition to the market. And tuition to the market, I've seen be as expensive as $80,000. That's the most I've seen somebody pay. I've seen somebody lose a lot of money and they tried to get it back. And then the money they lost trying to get it back, they lost that money too. Most people don't. That's why I said that. You're right. I'm open to help anybody that's here. I'm only taking serious people only, though. If you are serious and instead of curious, type 1v1 in the chat right now, and I will reach out to you. Somebody on my team will inbox you. But remember, I will get on the phone or a FaceTime or a video chat meeting, some type of way to verify that it is me. I don't want y'all communicating with those robots. The scammers on TikTok, you got to be careful with them. Remarkable King Glass says, I was in a mentorship and still lost $60,000 last year being hard-headed. The mobile trader says SPY 5-minute candle broke and closed above previous day high. I entered on the 1-minute pullback, stop loss below the 1-minute candle break. That's what's up. You went ahead and did it right now. No E-money 558. It is not at all. But I have a question for you. Cheap tattoos are not good, and good tattoos are not cheap, right? Also, how much are you willing to pay for your success? How much is your success worth to you, E-money? You feel me? So I'm gonna inbox you. I will reach out to you. We're not gonna make it hard. There is nothing expensive. You can afford everything, E-money. You got enough money in abundance to pay for anything and everything that you need. Chester says, got 2 businesses, trying to make this my 3rd. You're not trying, Chester. You are going to. Chester, are you trying to listen to me, or are you actually listening to me? Are you watching me right now, or are you trying to watch me right now? You see the difference between trying and actually doing? Chester, McKenzie, you are actually going to do that. Jacob says, I'm a new investor, and I'm definitely adding you to my morning coffee scroll. You must be drinking coffee late at night. Yeah, I'm in my WAP community at 9 a.m. in the morning, 8 a.m. in the morning. I'm on the phone with a lot of people most of the time in a Zoom call or a Discord meeting, okay, in the mornings. But you won't see me on TikTok in the morning. I try to come on here in the daytime, but they are boring. They don't talk, they don't engage, they don't ask questions. It's something about the night shift. Shout out to my night owls. Y'all up. You know what I'm saying? Graveyard shift does not play. Y'all come to learn, and then y'all got the most what's the word I'm looking for? Power of execution. Y'all really be doing this shit that I'm teaching you. Bambi Baby, if you're interested, the link is in my bio. It's actually on an app called